You look at a Bitcoin chart and man, it can feel like pure chaos, right? News, hype, a million different indicators all shouting at you at once. But what if I told you there are hidden forces under the surface, really powerful ones that are actually driving those wild price swings? Well, today we're going to pull back the curtain and go way beyond the basics to decode what's really going on. We're going to look at the data the pros are watching.
So here's the game plan. We'll kick things off with the seriously conflicting signals traders are seeing right now. Then we'll dive into a powerful contrarian indicator, and from there, we'll get into the real engine room, leverage and liquidation cascades. We'll even learn how to spot these zones, these price magnets. And finally, we'll wrap it all up to show you how this gives a trader a serious tactical edge.
All right, first up, let's just set the scene, because right now the Bitcoin market is a total puzzle. You've got two huge groups making completely opposite bets, which leaves everyone else scratching their heads trying to figure out where we're headed next.
And just look at this massive disconnect. On one hand, you have the big money, the institutions just pouring capital in. We're talking almost $2 billion flowing into Bitcoin ETFs in just the last month. That's the so-called smart money buying things up. But then, on the other side, the average retail trader is absolutely terrified. The fear and greed index has crashed down to extreme fear. That signals widespread panic selling.
Which, of course, brings us to the million-dollar question. When the big fish are buying and the little guys are panic selling, who do you follow? Let's start digging in to find out.
So, our first real clue actually comes from all that retail panic. You see, a lot of seasoned traders, they don't see extreme fear as a red flag. They see it as a green light, a sign that the market might be about to turn around.
The fear and greed index is basically a mood ring for the market. And when it hits extreme fear, it means almost everyone who was going to panic sell has probably already done it. They've capitulated. And think about it. If there's nobody left to sell in a panic, who's left to push the price down any further?
This really nails it. These moments of capitulation, where the selling pressure just completely dries up, they often mark a major turning point. It's the moment where the balance of power can shift from sellers back to buyers.
And this isn't just theory. We've seen it play out just recently. Bitcoin's price bounced back over 8.5% in just a week. And the whole time, that sentiment index was stuck deep in extreme fear. That divergence is a classic signal. It strongly suggests that while retail was freaking out and selling, the institutions were on the other side of that trade, quietly accumulating.
Okay, but sentiment? That's only part of the story. To really get what makes Bitcoin's price go wild, we have to look under the hood at the derivatives market. We need to talk about the hidden engine of leverage and the crazy chain reactions it can spark. This is where things get really interesting.
So, a liquidation cascade, it's like a domino effect on steroids. It all starts with a price drop. That drop forces traders who borrowed money, used leverage, to have their positions sold off automatically to cover their debts. Well, all that forced selling pushes the price down even more, which then triggers the next wave of automatic selling from other leveraged traders. It's a brutal, vicious cycle that can cause prices to absolutely plummet in minutes.
And here's what that looks like in the real world. In just one recent 24-hour window, more than 76% of all the liquidations, all the forced selling, came from people who were betting the price would go up. They were the longs, and they got wiped out. This tells you that a recent price drop wasn't just regular selling. It was massively amplified by this cascade.
And the sheer scale here is just wow. We're talking nearly $60 million in positions getting forcibly shut down in just 2 days. This isn't a few people getting a trade wrong. This is a force that literally moves the market.
So that brings us to a really powerful question. If we know these liquidation cascades are what's driving the price, can we actually see them coming? And the answer is, yeah, pretty much. We do it by hunting for what are called liquidation clusters.
So a liquidation cluster is just a fancy term for a price level where a ton of leveraged traders have all piled in. And because there's so much money at stake right there, these zones act like magnets. A small price move towards that cluster can be enough to tip over that first domino, which sets off the whole cascade and just sucks the price right through the entire zone.
Now check this out. This is basically a treasure map of where those clusters are right now. Look up there, above the current price, near 73.5. There's an estimated $6 billion cluster of shorts. If the price moves up into that zone, it could trigger a massive short squeeze, a super fast price jump. Now look below us. The critical line in the sand is around 68 to 69,000. A break below that, well, that could trigger the same kind of long liquidation cascade we were just talking about.
And this is exactly why the pros don't just see these clusters as risk, they see them as targets. They're looking at that $80,000 level not as a wall, but as a destination. It's a magnet that could literally pull the price up there, but only if we can break through that initial resistance first.
So let's put it all together. How does an actual trader use all this, the sentiment, the leverage, these cluster maps, to get a real tactical advantage in the market?
It's really about building a complete, multi-layered picture. You start with sentiment. Is everyone panicked out? Then you use your standard technicals, moving averages, RSI, the usual suspects, to get a basic lay of the land. But here's the secret sauce. You then overlay that liquidation map on top of everything. That shows you which of those support and resistance levels are supercharged with leverage, making them high-probability targets. And, maybe most importantly, it tells you exactly where not to put your stop loss. Because placing it inside one of those clusters, that's just asking to become fuel for the cascade.
See, when you do all this, your whole perspective shifts. You stop being reactive to what the price is doing, and you start becoming predictive. You begin to understand the forces that are likely going to cause the next big move. And you can position yourself to ride that wave, instead of getting crushed by it.
So, with this map of the market's hidden plumbing laid out in front of you, the final question really comes down to you. When you look at these liquidation zones, these price magnets, what do you see? Do you see a threat you need to run from, or do you see an opportunity you can seize? Are you going to be the hunter, or are you going to be the one who gets hunted?